Hello and welcome to another update video about Bitcoin as we're heading, well, towards the end of the daily candle. We want to talk about the overall scenario here on the Bitcoin chart again, and I would like to talk about the short-term bullish and the short-term bearish scenarios again that we've already discussed in previous videos. Particularly, I would like to talk about the differences and the small nuances that we can see and that we can use to differentiate between a short-term bullish and short-term bearish scenario, because they are looking very similar at the moment. You can't really distinguish between them. You can't really say, okay, we are in a short-term bullish or bearish scenario at the moment. We haven't broken support levels yet, so it could still be the short-term bullish scenario. We haven't come down deep enough to rule that out. So again, both are possible. However, what you need to understand is, what is the bigger picture? Bigger picture is that both of these, the short-term bullish and short-term bearish scenarios, they are embedded in a larger bullish scenario in which we could rally next in a third wave that might take us above 40k. However, as I said before, don't think this will be a easy path. I think the times where Bitcoin moved so easily, like many years ago, they might be over, at least for now, and I think it will be a very rocky road. So what I can only encourage you to do is understand how market psychology works, understand or work on your psychology, work on your mental game, the mental muscles that you need for trading for these markets actually, because otherwise you will not survive it. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. Okay, so looking at the structure here, let's start with the short-term bearish scenario. That is for now still the primary scenario, and we're going to talk about why. I just simply haven't seen enough evidence yet that we are in the bullish count and that it is going to break out. It is of course possible. That's why I show you both, because they are both likely scenarios. Okay, we have 2 scenarios only. They are both likely, and there is typically anyway a bullish and a bearish one. I think they have fairly similar probabilities at the moment, but I'm leaning towards one more low. Nevertheless, I will also give you the clear parameters that we need to see in order to be more bullish. And again, these 2 scenarios are part of the larger bullish scenario. So in the short-term bearish one, we are still in this wave 2 correction. So we topped in a wave 1 in April. We are still in the wave 2. And in the wave 2, we're looking at a WXY structure. And basically, we're now in this Y wave. And in the Y wave, we are dealing with an A wave, a B wave, and a C wave. And we are now in the B wave. If we get that one more low, that I just showed you, certainly the area between 23,960 and 25,300 is a likely target. That's between the 61.8 and the 50% retracement level. We can also take into account the Fibonacci extension. So if I take the length of the wave W, I go to the high of the X wave, then you can see that there are a few levels of interest down there. First of all, the 1-to-1 ratio was reached anyway already. That was here at 25.9K. The 1.236 extension, also a target to watch, is at 24,940, and the 1.618 extension, quite far down, but also a likely target for a wave Y, is at 23,370. They are certainly levels to watch. Now let's zoom in and let's take a look at the short-term bearish count. So the idea is, and let me actually move the bullish one to the side. The idea is that in the short-term bearish count, we completed off the 12th of May low, an A wave to the upside, a B wave down, and a C wave up. In the short-term bearish scenario, we first of all, I find that more likely because the wave A is a 3-wave move. Yeah, that's the first point. The wave B came down deeper than it would be ideal for a wave 2. So as a B wave, in such a flat pattern, what this could be, a B wave retracement to the 88.7 fib level, which it did, is quite common. Yeah, so that's already 2 points why I'm leaning towards this. And then it takes quite a long time here to put this 5th wave in place, because if we have an A wave and a B wave, this would be most likely a C wave. Or a Y wave if this is a WXY. They are both possible. But yeah, I mean, it could give us one more high. But if we don't get one more, then it's probably a WXY structure, and it would rather confirm my, let's say, my leaning that I'm still watching here for one more low. It doesn't really get off the ground here. Even if we get one more high, which I think at the moment is still fairly likely, it would not be necessarily bullish. It would just simply be a complete looking ABC structure. Yeah, because this leg up would just be the 5th wave of the C wave. And next Fibonacci retracement level, which is relevant, is $29,096. One more point also, I think we looked at it in one of the last videos, it's just volume. Volume isn't really picking up. I mean, okay, this is the 1-hour chart, but let's go to the 4-hour chart. If this was already a 3rd wave to the upside, you should see a pickup in volume, and volume isn't really picking up. It's not really picking up, especially considering what happened here before in this entire correction. Volume is still down. So if this was already a 3rd wave rally, we should see a bit more. And all of these points make me personally focus more on the short-term bearish count. But yeah, also in the short-term bearish count, we can get one more wave up. And that is likely that we get that one more wave up as long as we're holding 27,526. Yeah. If we avoid a sustained break below the 50% fib level, we can get that 5th wave to the upside with resistance at 29,096. And if we break above that level, we have resistance at 29,840. So this is the short-term bearish count. The short-term bullish count would simply, well, looks very much the same until here. So if you have a 1, 2, 3 or an ABC, it's basically very similar, the same. Whereas if this is the bullish count and we have a wave 3 here, I would at least like to see one more high. In the short-term bearish count, the top could already be in, but it could also get one more high. Now the difference will occur after one more high. Yeah, this is where it's going to split, because in the bullish count we would get a higher low in a wave 4 and could then get a wave 5. In the bearish count it would break down. And as soon as we have a clear top in place, I will give you the support area that is relevant, the pivot point that we need to be watching out for. And yeah, that's basically the situation. Again, I'm skeptical towards the short-term bullish count until I see that we are getting 5 waves to the upside. If we have these 5 waves complete, and that could certainly go into the 30K, low 30K region maybe, or even 230K only, yeah. if we have these 5 waves up, then we should see a 3-wave pullback, and this is then another 1-2 setup. One more word of caution: this bullish count is not really reliable yet until it forms a 5-wave pattern. Then at least we have evidence that it has bottomed, because at the moment, not really, because the move of the 12th of May low was just corrective. And again, what could be a wave 2 came down a little bit too deep to be a reliable wave 2. Typically a wave 2 would reach the 50% to the 78.6 retracement level, not really below that. Yeah, it's very rare. For example, the 88.7 fib level is a very rare level on such a time frame to be reached. And well, it's not necessarily rare to be reached, but that it still works out as a bullish setup. That is rare. Okay, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.